And this is what I'm seeing now is I think that this breakdown is the beginning of the end, meaning the beginning of the end of the bear market. Where I think that, yes, we're going to go lower, but wherever we bottom here, that's going to be finally the bottom. And usually that in markets, whether it's the stock market, that final panic, the one where, you saw big money losing on FTX, you saw small money getting crushed there. That's usually the end where people finally give up. And that's what we're getting to at this point, at least starting to see. I think it's something that we have to get through. It's going to force regulation on the industry, which I know everyone hates. But at this stage, I think we all have to admit we need some sort of clarity, some sort of rules so that investors feel safe. Now what you're seeing is as we're down in this 16,000 range, and my downside target is now about 9,000.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his thoughts about the recent mass panic triggers $1 trillion crypto price crash and short squeeze warning, as FTX's FTT goes into freefall, dragging down other cryptos. This continues to unnerve traders in a space so driven by sentiment. Before listening to him, please ensure to smash the like button and subscribe to the channel.
I mean, you look at what happened with FTX. I mean, a while ago it was Terra Luna, Celsius, Voyager. I mean, you can go on and on, but I mean, there's just black swans everywhere popping up. It's almost becoming a common thing, unfortunately, in the crypto markets. But let's hope that, and this is what I'm seeing now is I think that this breakdown is the beginning of the end, meaning the beginning of the end of the bear market. Where I think that, yes, we're going to go lower, but wherever we bottom here, that's going to be finally the bottom. And usually that in markets, whether it's the stock market, that final panic, the one where, you saw big money losing on FTX, you saw small money getting crushed there. That's usually the end where people finally give up. And that's what we're getting to at this point, at least starting to see. For me, I mean, I've always been a purist in terms of I haven't been scared of regulation, right? So my accounts are at Coinbase, Kraken. I think Kraken does 2 audits a year.
Yeah, I love Kraken.
Coinbase is publicly traded as a stock, so I think there's some SEC oversight. So it makes me feel a little bit better. But one of the things I always say is that, if you have, it doesn't matter if you have 5,000, 10,000, or 100,000 or $1 million, it's smart to kind of take portions of that and spread it around different exchanges, because if one goes belly up, at least you're only losing 10% or 20%, not 100%. And it's just basically risk management. I mean, it's crazy in this day and age that you have to decide, it's not a matter of does Bitcoin go up or down or crypto go up or down. It's, does my exchange basically take my money and run? I mean, that shouldn't be the way it is, but it's crazy with FTX. It really is. I mean, I think this likens back to Enron for me, to WorldCom. Some in the early 2000s, there were stocks that did some shady things and they went bust. And it's kind of a growing pain for an industry. I think it's something that we have to get through. It's going to force regulation on the industry, which I know everyone hates. But at this stage, I think we all have to admit we need some sort of clarity, some sort of rules so that investors feel safe. I mean, really, as an investor, your only concern should be, is my crypto going to go up or down? Not am I going to wake up tomorrow morning and my money's vanished, right? And that's where we have to get to. It's basically when they say when the tide goes out, that's when you see who's naked and who's wearing a bathing suit, right? And I mean, when Bitcoin and crypto is collapsing, it's going to show the bad actors. Anyone who took over leveraged risk is going to get kind of hung out to dry. And one of the things you always remember, and I learned this from stocks, is if you're in a stock that promises too much, and a lot of these crypto exchanges, they're like, oh, we'll pay you invest in this coin and you're going to get 20% or 50%. There has to be a point where when the merry-go-round stops, you have to get out of those scenarios because it's too good to be true. And I think that's what we're seeing now, is a lot of these players were just promising too much. And it was all about, oh, I got to go long, I got to jump on this train, right? And now what you're seeing is as we're down in this 16,000 range, and my downside target is now about 9,000. A lot of people are like, well, do we go short, right? Do we go short now down there? And what I say to them is, if you took the chart of Bitcoin and you flipped it around, it's basically like you'd be buying at 60,000 now. I mean, essentially, right? 16,000 to 9,000. So you have to say, was that a smart move to buy at 60,000 or 65,000? The answer was no. Well, then the same thing to me. Yes, I still think it's going to go a little bit lower, but you're so close to the bottom, in my opinion. Now, it just doesn't make sense to short it. If anything, I'm starting to kind of slowly, like every 2,000-3,000 down from here, I'm starting to accumulate Bitcoin.
One thing that people could look to do, if they especially did a lot of buying this year on the way down, you could look to do some tax loss harvesting here, because you're probably in the red. I don't know. Is that something that you've done in the past, or plan on doing this year?
No, for sure with stocks more so. I have been very nimble in crypto on the way down, just kind of buying in and jumping out a little bit. But it definitely is. I'm not sure about the rules in crypto, like you know, how long do you have to, is it the same as stocks? You have to wait 30 days before you repurchase?
I don't believe.
Yeah, so I'm not sure what it is, but just make sure you talk to your tax professional. But you know, if you made 100K and you have 100K loss, why pay that tax if you can avoid it?
Exactly.
Just have it washed, and then, you know, back in January, whenever you're able to buy back in, just buy right back in with that same amount. So, and I don't think price is going to go that crazy where you're going to get a materially huge difference in price between, let's say, December 31st or whatever and January 2nd or whatever it is. So a couple things on the charts. And so one of the things that I've been recognizing is that the FTX collapse is very, very, very similar to when Lehman Brothers failed in the financial crisis, right? Okay. We were already down significantly in the stock market, and then we saw Lehman Brothers fail, and it was kind of like that big blow up in the industry. In this case, it's an exchange, but you could argue that the exchange is the banking side of crypto. So it makes sense that it's very similar. You saw big money get hammered when Lehman Brothers collapsed. You're seeing big investors, big money get hammered in this scenario. You know, the third biggest exchange it was, and Lehman was one of the biggest banks at the time. So the same sort of things are occurring. And what I did was I went back on the S&P 500 and I said, okay, from when Lehman Brothers collapsed, and we're going to go back to 2008 here and take a look. All right, so here it is. Here's Lehman Brothers, and it basically was the last final collapse before the markets bottomed. And so I said, okay, what was the time frame? And if you look here, it was on September 15th that Lehman collapsed, and the markets bottomed March 9th. So that was approximately 5 to 6 months. So in my mind, now I have a kind of a potential game plan for that to bottom out. Now, interestingly enough, the markets bottomed out on the S&P in 2009 because the Fed started printing money, right? Well, you could say, well, what would be the equivalent of that in the crypto markets? Well, the Fed's not going to print money. We know that. Not until inflation is under wraps. It's certainly not going to happen by early next year. But I do believe that the equivalent for crypto would be getting transparency and regulation, where you're going to have money finally feeling safer to enter the crypto sphere. And so it's very likely that with big investors, in fact, Kevin O'Leary was saying this the other day in his interview. He's like, I'm going to go to Washington right now and demand for regulation, because he got burned.
Yeah, he did.
Yeah. And so to me, I'm like, okay, well, the way crypto goes up is if you draw a lot of money in. The only way that's happening without the Fed printing is with regulation, which creates transparency. And so the idea is within 5 to 6 months, I do believe that the government will have a framework, that Gary Gensler will have a framework for this. And I think then money will start to flood back in on crypto. Now, in terms of my target for 9,000, what I did was I said, okay, if we look at the crypto market, right? This is where this is the S&P. So this was the high on the S&P at around 1,600. When this occurred, we were around 1,200. And then how much further did we drop? We dropped to about 600 and change. So to me, it gives me a framework saying, okay, 40 to 50% downside from here. That puts us at around 9,000. I also think that the 10,000 break is going to be a back-breaking event for a lot of individual investors, which is usually how bottoms are formed, when they finally throw up their hands. Psychological.
Yeah,
right?
We lost a digit. It's over.
Right.
Yeah.
So they're going to say, oh my God, it just broke 10,000. This is a catastrophe. And they're going to, generally, people will be triggered emotionally to dump at that point, which oftentimes marks the bottom. So that's where I'm coming up with it. The last thing I want to share with you guys is, you know, everything comes back to charts with me. And interestingly enough, if we take this trend line, let me put a trend line on here. If we go to the pre-lows before the 2017 highs, and we put a line there connected to through the collapse lows of 2018 and 19, it coordinates perfectly with the 2020 COVID low. And guess what price that is? Right now, it's about 8,600. But in a few months, in let's say 4 or 5 months, it's probably around 9,000. because it's an upsloping trend line. So then you have a trend line, which would be basically taking crypto back to this longer term trend line that would also match up with that cycle, with that correction. So for me, again, listen, just like, I could be so far off, it's not even funny, but all we can do in the technical analysis world is look at what probabilities are telling us, look at history for guidance, and do our best to make decisions. Because I see it at 9,000 doesn't mean I'm going to sit on my hands and not buy any Bitcoin down to 9,000. To be clear, I've already started my HODL position, right? So I basically know, and this is from being a pro trader, and Tom can vouch for this too, is like, you never know where the bottom is, you never know where the top is. The best thing you can do is like do what I call shotgunning, where you shotgun it, meaning you spread out your buys in the general vicinity. And this way you get some exposure. If it doesn't go to your low, at least you have some exposure. So for me, I basically took X amount of money and I divided into 6, 1, 2, 3, 4, 5, 6. And I bought my first 1/6 of that. So one portion of that money, I'm already in Bitcoin as a HODL position. And basically when it gets below 15, I'll do another one. If it gets down to maybe 13 or 12, I'll do another one. At 10, I'll do another one. And the idea is if it doesn't get to 9, which is my target, that's okay, because I've got lots of exposure by the time it gets down there. If it goes to 7, I buy a little bit more, and then my dollar cost average is low enough. So I just want to be clear is that, even pros, you can't be like, I'm only going to buy at this level. If the thesis for Bitcoin is still strong, then you kind of start to say, okay, it's low enough now. I mean, now you're at 16, where, yeah, it could go to 9, and that's a big percentage drop from 16. But in the scheme of 69 to 16 or 9, it's not that much anymore.